Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty podcast. Excited to be here today. We have a really fun show lined up for you. First, we're doing a market update on Birmingham, Alabama. Then my good friend and Think Realty resident expert, Pam Goodwin, will be on the show with us. And so we'll be jumping into that in just a moment. And then we'll talk about two interesting topics. Number one is seriously underwater properties are increasing from a year ago. Seems kind of interesting and something you should know. And then number two, the cannabis real estate investors are attracted to opportunity zones to shelter capital gains. I never thought about this opportunity, or I never thought about this as a strategy, but it seems like an interesting one. That's what's coming up on the Think Realty podcast. You don't want to miss it. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for selling and buying single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find out your next cash-flowing rental property at roofstock.com/thinkrealty. Let's jump into Birmingham, Alabama. Good old-fashioned Birmingham. I don't know why Birmingham's old-fashioned, but I think it's just a city that's been there for a while, hence old-fashioned. Birmingham, Alabama, metro population 1.2 million, median household income about $52,000. Some interesting statistics. My good friend Kathy Fetke at the Real Wealth Network kind of curates and puts together on a regular basis. Unemployment rate 4.4%, median home price about $100,000, and the median monthly rent $995. Very, very interesting. Alabama, you're looking at purchasing property in Alabama from between $80,000 to $160,000. Though I feel like you can get a better price than $160,000 for properties in Birmingham. I've looked at the MLS and I've looked at, let's say, the Birmingham IDX or the Montgomery IDX, and you can find properties for between $65,000 and roughly about $95,000 that still look okay, that don't need a whole lot of rehab. Check out Birmingham. Even at a 1% rule, the $995 on a median home price of $100,000 seems like a pretty good idea and worthy of further exploration. All right, my good friend Pam Goodwin will be joining us. My good friend Pam Goodwin, welcome to the show. How are you doing?
I am doing fabulous. And it's always so great to see you, Abhi.
Oh, hey, likewise. You know, the good thing about finally being able to do some more video is people get to see how amazing and beautiful my guests are. So thank you so much for showing up, and everybody still believes I have a voice for radio. So that's always a good thing. I get to show at least my face a little bit every now and then, which is also helpful. So people can find you at pamgoodwin.com. You are also a Think Realty, a resident expert, and you're really well known in the commercial real estate space. So give us a little background on who you are and what you do.
Thanks again for having me. Love being on Think Realty. So based here in Dallas, Texas, Goodwin Commercial specializes in developing pad sites with a national retailer. So for example, the Walgreens, Chase, McDonald type tenants, we buy the land and then lease it back to them. We also do brokerage, which we primarily represent tenants and restaurants. And then we also do consulting work. So just recently helped a lady who bought a piece of property, 2 acres, wanted to develop senior living, hired me as a consultant, and we were able to get her a $3.3 million loan. So been in some format, always worked on the landlord side, then on the tenant side, worked for Brinker International, developing more than 50 pad site Chili's from the ground up and then on the border for the whole country. So more than 30 years, landlord side, tenant side, now have my own business, specializing pretty much 100% in retail, but it is changing with the retail sector and doing a little bit more in the office. So thanks for having me.
Hey, you got it. Not a problem. Sorry, Pam. I think I motioned to Isaac in that little intro. I'm like, put me on video. All right, hold on. We can keep rolling. All right, cool. Thanks, Pam. I certainly appreciate that. I mean, you have a storied history with real estate investing, and you being that commercial real estate investor that even I go to when I have questions. So thanks so much for leading the charge and doing such an awesome job and just being you. You see a lot of trends in the marketplace, especially where you are in Texas and, of course, nationwide. What are some of the trends that you're seeing right now that new and experienced real estate investors who are interested in getting into the commercial space need to be aware of?
I know it really does. We're based here in Texas, and thank goodness I do like to shop and eat. So I'm always looking for new trends. But I think nowadays, really in the retail world, even in office and medical for that, it's just, they call it co-everything.
Yes.
And so, yeah, so for example, I was just at my niece's graduation in Chicago and had to run into the local Target. And right at the beginning of the store was a big pop-up display with Vineyard Vines, which is typically a high-end store.
Yes.
And so Target has collaborated with them. They did it before with Tory Burch and sold out in an hour. And they're selling stuff from $2 to $120, but most of the items they said, are under $35. So the collaborating and everything, just so, everybody can see what works, what doesn't, to, get your audience or your buyers in different locations.
That's right. Co-working has been a pretty interesting bubble, maybe just being popular. Like I see WeWork popping up all over the places. You got spaces, and then you have independent co-working spaces. What's going on there? What should I be aware of there? Is this an industry trend that I can make money on? How can I take advantage of this?
So doing research. I currently have a client that has a 15,000 square foot office building. So I've been researching a lot of co-working spaces and read that back in 2007, which was just 12 years ago, they had 14 co-working spaces in the U.S. Today, they have more than 4,500 locations. And by the year 2022, they're expecting it to be more 6,500 to 7,000 locations. But, working with my client on it, we found out that it can be between 2 to 2.5% times more profitable to do a co-working space than your typical office space of just, getting a tenant, having them sign a 10-year lease.
Yeah.
Like WeWork said, come to us so you don't have to be on a leash instead of a leash is their tagline. And so I have visited several of them in the Dallas market, and what they're offering to me is, very, very exciting, especially as so many small business owners, entrepreneurs, even these large companies that are relocating to Dallas, they may need a space for a year for their employees. Yeah. It's an ideal location for them. And I can go over in more detail what some of them are offering too.
Yeah, I think that's a really good idea. So let's go through that detail, but I have a question for you before you do. Let's say I'm a startup. WeWork makes sense up until a certain point, right? Because I feel like I would get a shoebox of maybe like a 5 or 6 employee space or person's space for $1,800, $1,900 a month. If I paid a little extra on a 1-year lease, I would end up getting hundreds of square feet instead of the, 50 by 75 square foot space inside WeWork. So do you think that's a challenge for businesses to be able to operate in such a confined space?
Well, a lot of like the WeWorks, and I have visited a couple of those. Yeah. They are gearing towards the millennials, and so they're offering the free beer and free wine and have different events, for you, and it's a different. So you like the free beer and wine, don't you? So
I mean, I'm still working on my bicep curls here a little bit, so I'm not so sure about the beer, but the wine for sure. That can be kind of interesting. I know they have a Chardonnay, they have a Rosé, they've got a Merlot, they have a Cabernet Sauvignon. I mean, they have so many different. Anyway, going back to the point.
They'll offer whatever you would like, just to make sure the customer's always happy, right?
That's right. But I agree with you. I think WeWork is doing a really good job of curating experiences, not only for its clients, but then also for the outside community by offering a place where folks can network and gather. And if you happen to be a client of WeWork's and you rent the office space, it can really be beneficial, especially if you don't want to sign a long-term lease. So I understand that as well. What are some of these places doing to really entice you? I know WeWork, like you said, has the beer and the wine, etc. Are you finding any other trends that they're offering?
So I recently went to go visit one just a couple weeks ago called the Slate here. And I think if you're in commercial real estate, and I think this is a great opportunity to take, this is in our design district type location, more industrial, but it's definitely a great opportunity to go find one of those older buildings and that have the really cool design elements, the brick walls and all that. But this one that I went to go visit, they actually have, which is so popular, as you know, but they have a podcast room that you can rent by the hour. They also have a complete video studio that you can rent. And then they're pretty much holding daily events. And another thing that I thought was neat, they were collaborating on, because they said people do get kind of tired of the office space. So they have a different artist coming in quarterly to change out the artwork around the office, the co-working space, and then you can actually buy that artwork. So I thought that was a neat idea. So they're helping small business owners by bringing in marketing experts, how to do videos, how to have your headshots, websites, how to make money in your business. You know, they're offering some really, really great things in these co-working spaces.
I got a couple headshots over at WeWork a little while ago, and that was a lot of fun. And they always have, like you said, I mean, they always have business plan building workshops and things like that. So that's always a good thing. And I think if you are a new entrepreneur, you need some structure, you are a small business owner, you're looking for different perspectives, this is the place to find it. You're not going to find it at a Starbucks. You're not going to find it at your local coffee shop. You go to the coffee shop probably for a meeting or two, or just to sit quietly by yourself and journal, for example. I love doing that at my local coffee shops. I'm not necessarily there to actively meet somebody. But the WeWork in a business setting, you have the ability to do that, and quite frankly, it's better having a little desk too. But if you're just like a one-person kind of one-stop shop, you can also get what's called a hot desk, which is really neat. So they've taken your journey from being a solopreneur to a small startup with 2 or 3 employees, to a larger startup. If you want to combine offices, you can do that as well. So there are some pretty good options for the spaces in the WeWorks and this and that and the other. Last year, I think WeWork posted $1 billion loss or something. What's your take on that? It isn't necessarily them losing money. Wasn't that more of a reinvestment into their infrastructure and into their overall brand?
Right. From what I was reading also, just to continue to grow their company, show that as a loss. I'm always amazed at all those big companies, the Ubers, the Amazons, the WeWorks, they're $1 billion companies, and they all claim a loss. But they continue to grow. So I don't know how their business is when they all claim a loss, but you know it's interesting.
Yeah, you know what's funny? When Lyft had their IPO and Uber had their IPO, both companies don't really show a path to profitability. Right? Lyft even said, we don't see a path to, we don't currently have a path to profitability. Very interesting to me, but you know, they still hit a few $billion-dollar IPO. That's a valuation.
Right.
I'm like, I don't understand.
Right. So people keep giving them money and money, but anyway, so if you see an older building and there's a couple really good consultants out there that can actually help, you know, you see a 15,000 square foot building, you want to do a co-working. I have a really good consultant that can actually turnkey project from doing the market feasibility all the way to hiring the employees and getting all your software and apps set up, because they make it really easy, you know, to rent the place by a day and do a complete pro forma to make sure it is profitable, that you are showing a profit. So I think it's a great thing, a new thing to get into commercial real estate.
Yep, that's right. In recent news, there was a retailer that has closed like 40 or 45 stores. And I think you and I were going back and forth on this via email, and I can't remember the name of the retailer, but who is that person? What was the name of that retailer again?
I know it just came out lately, which who
Yeah.
would ever think that a retailer may have to close because of, helium.
You're
And
right.
so that was Party City.
Party City.
Part of it is the helium. I'm sure part of it is some of the
Yeah.
locations and could relocations. But a big thing that they mentioned was they're really having a hard time sourcing the helium. So
Yeah.
I found that interesting. And reading about helium, too much to go into on the chemical detail on where it all comes from, but it is interesting to find out what can impact a retailer.
I would have never thought helium. Like, just there's no way. I think the atomic symbol for that is He, if I remember correctly. But who would have thought helium would bring down a retailer? I think the coolest part about helium for me is, the high-pitched voice. Like that's pretty much all I got for you. New movie theater that allows dogs and offers bottomless wine. Are we starting to see these trends become more prevalent with these types of everyday products, or essentially everyday experiences? Walk into a movie theater, you got the lazy boys, you can recline all the way back, heated seats, pet-friendly, bottomless wine. That just sounds amazing.
I know. I just recently read about it, and they actually opened last year, not too
Yeah.
far here in Plano, Texas, and it's called the K9 Cinemas. And they
Ah,
do, yeah, K9 Cinemas. And I did read that they plan on opening that's based Dallas, Plano location and based in Austin. And so I'm sure they'll be going around the country opening where you can bring your dog and watch a movie, which is a great idea. And this bottomless wine sounds really interesting, but that's another way of just taking a couple ideas that you like to work and trying something new out. Everybody's, you have to be innovative in order for the retail survive, because we read every single day. I just read yesterday, Dress Barn is closing 650 stores. So if you're not being innovative, not that
yeah.
Dress Barn may have been, but you have to just stay with the times and just keep making a better experience for the customer.
It's such a good point. I found Canine Cinemas on Yelp, by the way. They have 4.5 stars, so great, amazing reviews, and you can even see a picture of this gal and her dog and this gigantic bottle of wine. Like that's just, it's so interesting though. Like who would have thought that that's something that's even possible, right? You would have probably barking dogs and all this stuff, but I think you're there more for the experience and you're out with your dog and you can meet other dogs outside of just the dog park. So I think that's pretty neat.
Right. I don't know what happens, when you see two dogs get close to each other. So,
right, and you're watching a movie and all of a sudden,
interesting.
I don't know.
Sure, they have it figured out, right?
Ever since, like I remember the very first interview that you and I did was on Think Realty Radio. And if there's one thing I appreciate about you, Pam, is your consistency and execution, and you're always looking for that collaborative effort in the retail trends and in the spaces so that you can engage them and you can say, hey, what if you take this idea and put them together and maybe it's a cool little marriage. So I mean, thank you so much for continuing to share some of these next level innovative ideas and encouraging all of us to really stay on our toes and really innovate, because that's how we stay in the game and that's how we stay relevant. So thank you so much for that. Pam is a Think Realty resident expert. You can find her at goodwincommercial.com, pamgoodwin.com. She writes a lot for LinkedIn. You can find all of her posts on LinkedIn and also Twitter. She's like the Twitter queen. So congratulations on all your success. What's the best way? I offered a bunch of websites. What's the best way that our viewers and listeners can reach out to you?
So best way is still just send me an email at pam@pamgoodwin.com.
Yeah.
And as you mentioned, definitely follow me on LinkedIn and Instagram. I'm really liking Instagram.
Yeah.
A lot these days, engaging, and then definitely Twitter, Facebook. So also have all that.
Yeah.
But the best way is definitely reach out on social media or send me an email and I'll respond.
Yeah, you rock. So Pam at pamgoodwin.com. I try to copy you as much as I can on Instagram, on Facebook, and I have no time. Like I just cannot keep up with you. So I don't know what your secret is. I'm still working on it. So again, congratulations on just being you and offering so much inspiration for the rest of us investors that want to get into the commercial space and looking to you for the inspiration to do that. Thanks again. I appreciate your time, Pam.
All right. Thank you.
You got it. Think Realty Nation. We'll be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. So, Pam Goodwin, you're a rock star. I love you. You're fantastic. Thanks so much for sharing the time, as always. Let's jump into some statistics, shall we? Adam Data Solutions had an article that they put out titled "Seriously Underwater U.S. Properties Increase from a Year Ago." And they have a pretty cool graphic here. And let's see if I can show this to you. A pretty cool graphic, and it outlines some of the areas where you're seeing an increased number of underwater properties. The 5.2 million seriously underwater properties at the end of Q1 in 2019 represented 9.1% of all U.S. properties with a mortgage, and that's up from 8.8% in the previous quarter, but down from 9.5% in 2018. This data, it's a U.S. Data as a Service, DAAS, today released its Q1 2019 U.S. Home Equity and Underwater Report, which shows that at the end of the first quarter of 2019, more than 5.2 million U.S. properties were seriously underwater. And this is where the combined balance of loans secured by the property was at least 25% higher than the property's estimated market value. And this $5.2 million number is up by more than 17,000 properties from a year ago. So 17,000 properties divided by 5.2 million, you're looking at a pretty small fraction. I'm not seriously concerned about that. But Todd Tata, who is the Chief Product Officer at Adam Data Solutions, says, quote, "With home prices increasing at a slower pace in 2018 than in previous years, the potential for people to climb out from mortgages that are underwater or advance into equity-rich territory still tends to be reduced." Yeah, I agree with that. I mean, that's kind of like the law of physics. However, only 1 in 11 mortgages are still seriously underwater today, compared to nearly 1 in 3 during the depths of the recession. So, okay, you got 1 in 3, 1 in 11, still a smaller fraction there, although if the latest trends continues, it will raise another clear signal of a market slowdown, which will be good for buyers, but not good for sellers. Again, law of physics, but I would say because we've had such a seller's market, it just makes sense to balance out a little bit. So those are some thoughts from Adam Data Solutions about the number of foreclosures and the number of underwater properties. Let's check out this cannabis real estate investors, the cannabis real estate investors that are using opportunity zones to shelter taxes. Kind of an interesting read here from the National Real Estate Investor.com article. QOZ offers a way for investors to defer and reduce taxes on capital gains. And if you want to do it the right way, you want to lock up your principal from the sale of an asset for a period of 10 years. And essentially, you're building equity in real estate assets and improving low-income distressed neighborhoods. Investors can defer tax payments on recent capital gains until 2026 if those capital gains are invested in a qualified opportunity zone fund or business. Gains from an eventual sale of the opportunity zone property or qualified business will also be tax-free if the investment is held for 10 years. So you want to pay attention to all the rules around opportunity zones and QOZs and funds and businesses that you may be investing in. Interestingly enough, cannabis businesses are still subject to tax code 280E, which eliminates the deduction of business expenses for income tax purposes for any business operations that include Schedules 1 and 2 drug protection or distribution. And this is according to James Mann, who's a tax partner in the New York office of Greenspoon Martyr, LLP. Quote, again, Mann says the tax benefits for investment in opportunity zones are unaffected by cannabis's illegal status under federal law, so investors can be assured that they can take advantage of this tax benefit. All I gotta say is that's very interesting. That's the show. We want to get in touch, ask some questions, go to thinkrealty.com. You can also get in touch with Pam. You can check out her videos, her resident expert videos on the thinkrealty.com platform as well. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. Think Realty Nation, that's a wrap. That's the podcast. Have questions, again, thinkrealty.com. Until next time, happy investing.